All right, back to work, back to work. We're not done with you guys just yet here tonight. We got some more work to do here this evening because after all, it is about that time of day again here, isn't it? It's end of the month. It's April 30th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. Now, don't forget, guys, I help traders find predictable, dependable, profitable trading opportunities, and to do that, we use a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is a little bit different. My job tonight is to find the best of the best levels, the best setups, the best opportunities setting up for tomorrow, the first of the month, right? That is, of course, May 1st and Wednesday morning's trading session. And tonight, we're talking about oil. We'll grab some S&P. We'll hit that Nasdaq, some gold, and we'll wrap up tonight on that mighty euro. I'm going to jump in here first on the crude oil chart tonight because as you probably just saw, oil just shot lower after this afternoon's API report, but this just might be a beautiful setup for the buyers. But with the bearish momentum, they need the right setup. Let's jump in and take a look right at this oil chart here because as you may have noticed here today, we went up, we went down, and we pretty much settled right inside of a trading range. Now, of course, end of the month, we talked about this last night. We were anticipating a little bit of low volume, a little bit of volatility, and a whole bunch of craziness, right? Because of earnings. We got what we came for here today. We got a relatively rock and roll, back and forth type of market, end of the month, classic situation. We have obviously now, right, we've got higher lows, we've got lower highs, right? This is a range-bound market. Now, with this being a range-bound market, I want to buy low, I want to sell high, and I want to avoid the middle. So as we're going lower right now, I'm seeing opportunities here to buy this market now going back up. If we can get up, I'd like to sell it back down. I've got a couple patterns I'm looking for on this chart here tonight. Got a slight bear bias to it right now. So I've got two different types of patterns I'm looking for to buy off of this low. And of course, I've got some patterns I'm looking for here to sell off of this high. And obviously with tomorrow being the big inventory report tomorrow, I'm clearly going to be watching for, right, any breakouts here as well. So we're buying low, we're selling high, we're staying away from that middle, and we'll break down the exact entry patterns I'm looking for in tonight's video. Over on the S&P here tonight, S&P in full lift-off mode. S&P, of course, all the way back up to retest those highs from late 2018. So we're back up to those big, right, major highs. It's really no question about it, right? Strong move up here, right, on the S&P. And the S&P and the Nasdaq, they are both setting up with some very strong spikes into the end of the day today. And really, when it comes to a big, strong spike up, I tend to look for three different scenarios here, right, after we see a big, strong spike. So big, strong spike, I've got three different scenarios that I'm watching for here for tomorrow. Each of those scenarios have a different plan of attack, and we're going to break that down for us. I'll also talk about what it takes for this market to reverse. No, it's not a small miracle. It's definitely possible for a reversal, and we'll talk about what the reversal looks like right now. So I want to be a buyer on this, right? I want to buy, obviously, this pullback, but I've got, again, a very strong spike higher. I've got three different scenarios I'm going to prepare for here for tomorrow, along with, right, that fourth scenario, which is that break lower. So make sure you stay tuned on the S&P here. Over on the Nasdaq, Nasdaq's in a very similar position. The only difference with the Nasdaq is the Nasdaq never went back up and retested, right, those recent major highs. So Nasdaq still has some leg room ahead of us, right? We still got some room to go up ahead of us, but obviously with this big blast higher here on the Nasdaq coming out of earnings this afternoon, We know that big spike tells me I've got 3 specific scenarios I need to be ready for here tomorrow. So we'll grab those scenarios, be ready for those here, right, on the video tonight. And obviously too, right, what if we go up, right? What if we keep going higher here? We'll put that plan together as well, along with if we do get that reversal. So Nasdaq is all set to go here. Nasdaq and S&P are very similar in a lot of senses, right, but very different, right, in a couple very important reasons. We'll talk about more on the video tonight. Over on the gold, the yellow metal, boy, oh boy, we had a range, and now that range now has morphed into a triangle now, right? Triangles are range-bound markets, right? Triangles are range-bound markets. Anytime we see a range-bound market, I'm trying to buy that low, trying to sell that high. I'm going to put together my favorite sell patterns off the highs, my favorite buy patterns off of those lows. We want to stay away from that middle right now. And there's a couple big differences between triangles and trading ranges, right? Or rectangles, right, if you will. We had a rectangle in last night's newsletter. Now it's a triangle. Triangles always tell me there's a couple differences here. We're going to talk about how those differences are going to impact us for tomorrow. We're buying low, we're selling high, and of course, we're looking for potential breakouts to get up to the measured move, right? And of course, down to that measured move as well. So we'll talk about buying, we'll talk about selling, we'll talk about the patterns we're going to use, and of course, we'll also talk about those breakout patterns as well. And then of course, over on the euro got a nice big strong, right? Nice big strong push higher here. They never got that collapse that I was anticipating today, right? You'll notice it pretty much went straight up, double top in price, and anytime I see a market make a bullish move like that and then struggle to keep going higher, anytime I see a double top, right, in a bull market like this, I always know that's probably going to be a trading range. So now we have a bull market into a range. Bull market tells me buy at support. This trading range itself gives me 2 very important support levels down around the 12.3 and the 12.100. Combine that with another great support level here, just above that 12.200, right? And we've got a recipe for success if we can get that pullback. Now remember, whenever we have a range, right, there are 2, maybe 3 different patterns we look for on that pullback. So we'll talk about my favorite patterns setting up on the euro. And then obviously, too, we'll talk about if this market wants to keep going higher, kind of where we can anticipate now, right, where that next objective is going to be. And of course, what the best ways will be to trade those objectives, right? So we'll talk all about that tonight on the video. So bullish into a range on the euro. We're going to break that down. Gold is range bound. S&P and the Nasdaq are jumping higher. 3 scenarios on the S&P to consider tonight. And of course, right, that oil, right, taking a nosedive here, right, into the closing bell here this afternoon. We're going to break all this down here. Before we jump in though, before we jump into all these charts and put the whole entire plan together, I want to make sure you never miss another great newsletter. And to do that, just join our mailing list. All you got to do is go to the blog here at Sideways Markets. I'll put all the links, by the way, in the description of this YouTube video. And just give me your name, your email address, and then hit that subscribe now button. And then don't forget, when you subscribe to our mailing list, make sure you check your inbox, because I'm going to send you a verification email, and I'm also going to send you a welcome email. So make sure you get both of those emails. They'll be in your inbox once you register. And don't forget, sometimes those emails get stuck in your spam filter. So if you don't see it in your inbox, check your spam, check your junk, check your, promotions folder, right, in Gmail. So go out and find that verification email, find that welcome email. All those goodies are there for you guys. And then that way, you'll never miss another great video newsletter, right? Because I send that email out right as I publish this video every evening, and I want to make sure you're on the ball here with me every evening. Also, too, speaking of being on the ball, I always love your feedback. It would mean the world to me if you told me what you love, what you hate. I'm always trying to make this newsletter better for you guys, right, every evening on the newsletter. So in the comment section below, if you give me some feedback, right, what's your favorite market? What's your favorite setup that we talk about, right? What's the favorite part of your of this nightly newsletter? How do you use this newsletter for your trading, right? Do you use it for the Asian session, the London session, the U.S. session? I would love to know what you love, what you hate. Drop me some feedback in that comment section. And while you're down there, give me a thumbs up on the video tonight. If you tune in every evening and you love this nightly newsletter, it would go a long way with YouTube to help spread the word to other traders by giving me that thumbs up. And while you're down there, hit that subscribe button, hit the icon button. That way you always get notified every time I publish something new. And don't forget, if you have any more questions, you're always welcome to pick up that phone, call me in the upper right hand corner. I've got a toll-free phone number and I got live support in the upper right hand corner. I am always standing by to answer the call, answer your questions, because there's all kinds of crap on the internet these days, right? Most of it is not completely accurate. I'd rather have you get the right information about charts, brokers, data, or anything in between. So don't be afraid to pick up the phone, call the office, or post questions in the comments section below. All right, hope you guys had a great day out there. Had a great day today in our trade room. Looking forward to another great day tomorrow. Tomorrow, of course, is Wednesday. It's May the 1st, right? Tomorrow, first day of the brand new month of May. Just a heads up for tomorrow. Tomorrow night will be my last newsletter of the week. There will be no newsletter on Thursday evening. I'll be out of the office right on Thursday and Friday afternoons. We will still, of course, have right our morning session right for the rest of the week, but I'll be out of the office right for the end of the week. So just be aware, tomorrow night is the last video newsletter of this week. We'll come back to our normal schedule, right, for next week. So tonight, right, of course, or sorry, tomorrow night, right, is the last newsletter of the week. No newsletter on Thursday. Talking about tomorrow, though, right, we're not quite there for Thursday's prep yet. Let's get ready for Wednesday first. Talking about Wednesday's session, we've got a lot of news tomorrow, right? 3 big news reports tomorrow. 1 is the ISM Manufacturing Index. 2 is the weekly petroleum status report, the inventory report. And 3, right, is the FOMC announcement. Let's tackle each of these briefly here. The first one is that ISM Manufacturing Index. Okay, anytime we have ISM numbers always tend to move the markets around pretty well. This, of course, being the manufacturing index tomorrow morning at 10 o'clock Eastern time. So that is going to be a very much anticipated kind of shot in the arm tomorrow morning because we got that Fed announcement later in the session. And so we might be a little bit low volume right ahead of that Fed announcement. We'll talk about that more in a moment as well. So bottom line is, I would assume, though, right, outside of tomorrow's FOMC announcement, that's going to be the big news of tomorrow morning's session. So be aware of that. We also, of course, have the petroleum status report tomorrow for all of you oil traders, right? Only applies to oil. Don't worry about the other markets for this. But if you are an oil trader like we are in our trade room, what you want to remember is on Wednesday mornings, you want to really kind of get to it either before 10 a.m. or after about 10:40 a.m. That's kind of the rule on Wednesdays. Again, this only applies to crude oil trading, but again, after 10 o'clock and between 10 o'clock and 10:40, right? So we'll trade together tomorrow on oil until about 10 o'clock, right? Usually things start going a little bit sleepy and sluggish ahead of that news report at 10:30. News comes out at 10:30. It gets very, very busy, very volatile, very unpredictable. But usually by about 10:40, that volatility will calm down. Again, only for oil, but make sure you trade around that news tomorrow because boy, oh boy, does it have a way of really, really messing up those charts. So 10 o'clock to 10:40, kind of carve that time right out of your morning tomorrow. And then obviously again, The last news event here for tomorrow is that FOMC announcement, followed by the press conference that comes afterwards. Now, if you're in Europe, this is very similar to the ECB announcement, right, where they give you the announcement, then about a half an hour later, they get to the podium and they do their pre-prepared remarks. They answer questions from reporters, right, that are unscripted. So there are three basic aspects of this big news report. One is the announcement. Two is the kind of prepared speech, right, that comes with it. And then three, right, is going to be those kind of live Q&A, right, where you get to watch the Chair Powell, right, tomorrow afternoon kind of squirm in front of those reporters. So the bottom line is the most important things that you want to be aware of for tomorrow is give it some time. First of all, trading before that news comes out is always going to be very dangerous. In fact, you could safely say that by the time we finish up in the trade room tomorrow morning at 11:15, 11:30, 11:45, right, depending on when the markets quiet down for lunch, that will probably be the last reliable opportunity we get until after that news comes out. Anytime I have the FOMC announcement, it's always going to be make your money in the morning, because it's always very difficult to trade before the news comes out after lunch. And then, of course, after that news comes out, it's always very much who knows, right? I mean, who knows what's going to happen after that news comes out tomorrow. There have been rumors about rate cuts, have been rumors about forward guidance for rate cuts. So this could really get crazy tomorrow, especially since it's the first day of a new month. And because it is the first day of a new month, we always expect to see when those months change, right? End of the month, first of the month, we do tend to see that volatility, right, transition over. So be very careful. Again, afternoon tomorrow. Again, we've got that ISM manufacturing here, right, at 10 o'clock tomorrow morning. That's the big news here. Petroleum status report. Remember that buffer, 10 o'clock to 10:40 for oil trading. And then again, on the FOMC announcement, make your money in the morning, because trying to trade after lunch, before the announcement, and then after the announcement, I always try on FOMC days, on Fed days, right? Find the best setups, find the high quality trades as early in the morning as you can, because as it gets later, you'll have fewer and fewer traders in the market because nobody wants to wrestle, right, with that meeting announcement. Then don't forget, right? Don't get too disappointed by that, because the time that we lose on Wednesday afternoon, we almost always make up for that time on Thursday morning, because Thursday we get a chance to trade the reaction to it. So don't go spending all your bullets, right, trying to hit that moving target tomorrow afternoon at the FOMC announcement, right? Save those bullets and save your sanity for the following morning, right? Because of course, right, that we have what is usually much easier price action, right? So instead of trading the afternoon tomorrow, save the bullets, right? Save the brain cells, save the stress, right? And come back and do it with us on Thursday morning. So we'll talk about Thursday morning prep, right, in tomorrow night's newsletter. All right, we're looking good. So now we got the news all ready to go here. Now I think we're ready here to jump into some charts here tonight. Looking at the charts here, I got crude, S&P, Nasdaq, gold, and euro on the schedule here for this evening. Most important thing that I always look for in any chart is what are the market conditions? Is this a trending day? Is it a range day? It's a range environment. We went up, we went down. Notice we did not retest the low of day. That was a big clue right off the bat. Went up, down, right? This market clearly has very little direction, right? Very, very seldom do you see a market go straight up like this, straight back down, not hit the low of day, and then bounce right back up. And again, you know, we had this coming. We kind of knew we were in store for this environment today with low volume, right? Greater risk taking, end of the month. You know, again, this was kind of par for the course today. It wasn't really, right, unexpected whatsoever. The real key was we found this range, right, late in the session this morning, right, on the oil. Well, that range, of course, translates over here, and you can see they still loving right on that range. So it's a range-bound market. Anytime I have a range-bound market, I always look for some sort of directional bias. You know, is there any real directional bias to it? You know, we went up, but then I think it's difficult to call this a bull market right now. Let's put it that way. It is. It's difficult to call this a bull market. I would say we have to take a little bit more of the bear side right now. I would say just by a little bit. Believe me, right, this is very bullish too, right? That's a very bullish move going back in. But I think you've got to give those bears a little bit of the edge right now. So knowing that I have a bear market, or a bear momentum, bear kind of bias to this market right now, and knowing I have a range, I have to be careful now, because when I have a range-bound market or a trading range on the chart, I know I want to buy low, I want to sell high, and I want to avoid the middle. Now, how do I buy low if the market's bearish? I know how to sell high in a bear market, but how do I buy low? Let's talk about this, because this is probably going to be one of the most, probably one of the easiest opportunities tomorrow morning going back into that range if we can get the right pattern set up. So I want to be a buyer below the low of the range. I want to buy it going back in. The problem is we have quite the bearish momentum right now. So let's dive into this, and what's the best pattern for me now to look to buy the low of this range, right, using which pattern? Now, we're bearish, I want to buy, so what I usually look for is because this market is running down into this key level of support, I'm expecting those sellers to try to continue this move. And I would imagine those sellers are probably going to give it a couple tries before they give up. So for example, as we go lower, and I know I have this level of support down here, right, I'm taking this trading range, I'm copy and pasting it down, finding support, copy and pasting it down, right? Finding my levels of support. So I got key levels of support down here. Strong move down. I would expect these sellers will at least try once to go lower. They'll probably try twice to go lower. And then once I see those bears kind of exhaust themselves, right? Try once, try twice. Then I can look for that nice strong signal candle, right? And I can buy now going back up into that range. Now, once I get back into the range, I want to stay out of that middle, right? Stay away from that middle. So we go down. Again, the bears will probably try once. They probably won't give up after that first try. They'll probably try again. And then I can buy as we go in off of those lows. Now, what if we get back up in the range now? Then what can I do? How can I sell this market? Well, remember, it's already a bear market or a slightly bear bias, right? It's a range market with a bear bias. So if we go back above these highs now what I want to do is kind of fast forward now, right? Now imagine now we get that run, right? 1, 2, and we run back higher now. What's going to happen? The moving average will come over. The buyers now, right, what they'll do, they'll try to buy that pullback. Okay, because of course, right, buyers will think it's a bull market at that point. It's not a bull market. And at this point now, the stops are exposed, right? We know the market is overall bearish. I want to be a seller up here. Now what I'll do is I'll wait for those buyers to try to buy that pullback, and I'll look to see what their stop is, and I'll look to sell right into those stops. Right? You can see an example right back here, right? It's a very small example here, but we go up, the buyers try to buy the pullback. When they fail, we sell into those stops, right? So if we go up, let those buyers now try to buy that pullback off the moving average. We know where the stops are right now, and we can sell right into those stop losses. So again, two basic patterns here. One is going to be what I call a nested failure pattern, or letting the bears try once, try twice, and then back up. The other one is going to be a straight failure pattern. We let the buyers try to buy the pullback, right? And we sell into their stop losses. Again, stay away from that middle. Buy the low, sell the high here on oil. Now, one thing we haven't talked about is what does a breakout look like? You know, for example, very strong move down. How would this market break out of that move? What does a breakout look like? Well, we need to see what we call a 1, 2, 3 breakout, right? How convenient. We have a pattern for that. What's the 1, 2, 3 breakout look like? First of all, it starts off with a strong break down or break up. It could be either direction in this one. Then we see a pullback to the moving average. That's the most important part. And then 1, 2, 3 is a strong move off the moving average. Now, once I have that strong move off the moving average, now again, 1, 2, 3, big strong move off the moving average. Now, mark that low, draw that trend line, and then bring that trend line up all the way off these highs up here, right? And that's going to create the hidden channel. Now that hidden channel combined with that low creates that sweet spot right there. And that's usually where you're going to get those sells, right, off the moving average, right, off the top of that channel for that next leg lower. So again, this goes on both sides of the market, right? If we end up running higher here, again, we'll try to sell into that failure, right? But if they do end up running higher here, moving average comes over. Again, buyers try to buy that pullback. I'm looking for a failure back into that range, right? But if we do see him hold that pullback, now mark up that high, down to that low down here, right? Off of that low, and that's going to give me that chance now to buy in that sweet spot, right? We recently talked about, right, that sweet spot. So we're definitely keeping our eyes open right now, right, for a possible breakout. So a quick recap here, right? It's the nested 1, 2 back in, right? It's the buyer failure back down into that range to sell off the high, or it's the 1, 2, 3 breakout, mark the high, find the low, mark up the sweet spot. And again, this will go for both sides of the market, right, on the way higher there or lower, right, for tomorrow. And again, don't forget, you got that big news report tomorrow on oil at 10:30, so get to these patterns early. So boy, we've covered a lot so far. We talked about the nested 2 tries, right? The failure patterns. We talked about breakout patterns. I want to teach you all my favorite patterns. And to do that, I've got a great free trading course. I'll link it up in the upper right-hand corner. I'll also put a big red button right below the video tonight on our blog. Grab that free trading course, because inside that free trading course, not only will you learn my 3-step strategy that we use every day in our trade room, but you'll also see examples of all of my favorite entry patterns. In fact, as part of that free trading class, I'll even send you a daily chart example so you can keep following along with me every evening, right, on this newsletter. So grab that free course in the upper right-hand corner. I'll be here when you come back, not to worry. In the meantime, while you're registering for that free course, let's keep going here right now, because we have a lot more to cover. Over on the S&P now. So the S&P is not a range-bound market, right? This is a trending market. Had a couple ranges that snuck in here today. Again, though, we pretty much got what we expected today. A low volume, highly volatile, unpredictable type of session. That was kind of what we talked about last night, and that's what we got today. So I can't complain too much, right? But boy, oh boy, this market sure finished the day strong, right? Didn't it? What a move up to finish off that retest of those highs from September 21st last year, right? So late last year, right? Those big highs at 29.56.5. It's a bull market. It's a trending market. Anytime I see a bull trend, I always know I want to buy at support levels. And I've got a couple key support levels I've marked up here. First of all, I think this trading range around 29.46 to 29.44 is going to be a big deal here for us tomorrow. In fact, if I had to guess, I would guess that will probably end up being one of the most important things in tomorrow morning's session, because again, we got FOMC right tomorrow afternoon. So it will be important that we get to these patterns early in the day tomorrow. I also, of course, have, right, a move up, pull back, and go. That's a level of support at 50.25. My only concern is that level of support at 50.25 really doesn't give us much of a pullback, and it would require us to buy relatively high. So it's not the most desirable thing in the world, but, you know, again, we'll kind of put that plan together more and more tonight, right, in this video. And then obviously I've got these highs lined up, right, off of that low, and this is giving me this hidden channel. That, again, you know, that's the one thing I worry about this channel, is that it's not really giving us much of a deep pullback. And deep pullbacks are really what the game is all about, right? Because then you get a chance to buy low, nice small risk with a big amount of reward. My biggest concern, though, is how the day ended, right? It's a big spike. And anytime I see a spike on the chart, anytime I see a spike on the chart, I always know to expect a couple key components. For example, first of all, a spike in channel, right? Strong spike up into it. You know, let's do it here, right? Spike up into a channel. A very, very common situation or a common result of a strong spike up is a spike in channel, right? Spike in channel patterns, we talked about this last night, they tell me to buy that pullback, right, into that buy zone at the base of that channel. Another very common occurrence is a spike into a range, right? Instead of higher highs in a channel, we get a range, we get double tops, we get double bottoms. If I see a spike into a range, I take the size of that range, I find my key support level by using what we call a range expansion level, right? I find that range expansion and we buy around that range expansion, right? That's the second scenario. The third scenario is the hardest one. Strong spike up, but now instead of getting those higher highs or getting those double tops, now instead we get lower highs. We get flag patterns. Flag patterns are by far the rarest, which is good because they're also the least or the most difficult. They really are. And really that has a lot to do with the fact that it's got a bear channel to it, right? And that bear channel tends to confuse people. The most reliable way to trade that bear channel, right, is to get that breakout pullback pattern, right, that happens above it. So three different scenarios that we're kind of waiting on right now, right? And since tomorrow is FOMC, I would guess we're probably going to get that range right in the middle. That's what I would guess here for tomorrow, because tomorrow is such a big news day with ISM right at 10 o'clock and, of course, FOMC at 2 o'clock tomorrow afternoon. So there are three of them, right? One is called the spike and channel. The other is called the spike and range. The other one is called it's not called a spike or anything. It's called a flag pattern, right? Flag, right? There's your flag pole. And then, of course, there's your flag waving in the wind right there, right? So in all of its glory. So spike and channel, spike and range, spike and flag. Again, on a spike and channel, you're buying the dip into that what we call the battle zone or the buy zone. On a spike and range, you're buying the dip right into that range expansion level. And then, of course, on the flags are tricky because you want to get back above the top, right, of that range. Don't forget, you can always screenshot this or draw this in your journal or draw this in your notepad, right, and have it for reference, right, tomorrow. I'll obviously be there tomorrow with you guys in the trade room to make sure you're doing it all the right way. So honestly, I'll be surprised if we use this channel here tomorrow. I'm honestly thinking there's a good chance here right now that we either, again, I'll be ready for the spike in channel, right? If we do get that spike in channel, then we know where we're looking, right? That level, right? We're buying that pullback from there. That would be your spike in channel pattern, right? I would assume it's going to be a spike up, right, into a trading range. We don't quite know what the range will be just yet, but we will know here in the next few hours. Once we have that trading range, then I take the size of that range, copy and paste it down. I couldn't tell you where it is right now, but like I mentioned earlier, I have a funny feeling this battle zone down here is probably going to work its way into the session tomorrow. So once we find that key support, right, then we look for, it's a range, so it's a two-try failure pattern, right? 1, 2, and we're buying back up from there, right? Anytime we have a range-bound market, we talked about this on oil a few moments ago, we want to see these sellers try to break out, get those bears to try to sell that pullback, right? And then buy right into those stop losses. And the one that, just because of where we are, we're right around those highs again. I'll be surprised. I won't be shocked, but that will be a spike, right, in a flag pattern here. Flag patterns, of course, right? Flag patterns are always tricky. What you want to remember is the first sign of a flag is the speed of the price action. It usually gets really slow as it starts pulling back. Then you get that lower high, right? And once you get that lower high combined with the slower price action, that's usually going to be your clue that you're dealing with a flag. Another important thing about flags is they usually give you 1, 2, 3 pullbacks at the very least. Oftentimes they'll go 4 or 5, but usually if you get past 4 pullbacks, usually it ends up being a failed flag and we end up collapsing all the way back where we came from. So knowing that this could be a flag, right? 1, 2, 3, and then it's up and over, and it's ultimately a breakout pullback pattern now using the top, right, of that bear channel. All right, remember, it's all about speed, right? The speed of that price action is usually going to be your easy giveaway. So now we kind of know those 3 scenarios right now. I'm expecting us to get a range up here, big strong move up, back to retest those highs from last year. I would expect we see a range. If we get that range, don't forget, you want to let those bears try to take it lower, let them try to sell that pullback, and then now we know where stops are, and we can buy right into those stops using that failure pattern. Now remember too, right, if they hold that pullback, right, if they get that 1, 2, 3 and they hold that pullback, sure, mark up that low, mark up that trend line all the way up top now, right, off that high. That creates your new channel, and now we're looking to sell off that channel high. And usually the pattern you look for, right, if you kind of zoom in on this area right here, think about this little area right here, right, usually that pattern will be a buyer failure into a seller pullback, right? That pattern, if you kind of imagine me kind of zooming in, right? Imagine me kind of zooming in that area right there, right? It's usually going to be buyers that try to buy the pullback. We sell into their failure, and of course we get that, right, failure back over again with that pullback pattern. So 2 easy ways to sell off the top of that channel. And again, I'm just simply illustrating this right now. If you want to see hundreds of examples of these patterns we find every morning in our trade room, grab that free trading course in the upper right hand corner, or hit that big red button below the video tonight on our trading blog. So again, I'm anticipating that range bound market. If we do get that spike in channels are great also. Just make sure you get that nice deep pullback, right? Keep your eyes on that area there, right? But get that pullback. What will happen is once you get that pullback, the moving average will come over. The bears, of course, will try to sell off that moving average. And once I see those bears trying to sell this thing off the moving average, now I know where stops are, and I can buy right into those stop losses. And of course, the flag pattern is just going to be that breakout pullback. So, you know, barring any craziness we see here in the overnight session, we should see 1 of 3 of those situations. Now we know what we're looking for. Now it's a matter of time. I'm waiting for it. And of course, tomorrow morning we'll be in our trade room 8 o'clock Eastern time, and we'll put it all together no matter which of these scenarios that we get. Over the Nasdaq now. The Nasdaq obviously is not as lofty as the S&P is. We talked about that earlier tonight, right, on that video. That 78.80 area, right? That 78.80 level all the way up top there, 78, 79.5, right? 78, 70, right? 78.80. That area is the big objective right now, right, for these buyers. Very different on the Nasdaq, because the Nasdaq still has some breathing room overhead. The S&P clearly is right at, I don't want to say it's limits, right, but it's right at a major level of resistance, and you've got to assume a little bit of resistance will find its way in there on the S&P. So Nasdaq definitely has some room to grow here, and so we'll definitely want to take a look about how that might work out here, right, as well. So not a lot is different about the Nasdaq. We did have that big move down. We talked about they got their next leg lower. The bears had it in full control here and then rallied back up, and just a great example here of a 1, 2, 3 reversal, right? Drawn off that high, down off that low, buying that pullback. Just a great example of exactly what we just talked about, right? Obviously this is bullish, right? But you get the 1, 2, 3, right? What do? You mark up, right? You mark up those, you bring it down off that low, right? You got that channel now, and you buy off that low. So that's a great example of that 1, 2, 3 reversal, right? Mark up that level, right? There's your sweet spot. So if you're wondering what those 1, 2, 3 reversals look like, that's a great example of one right there. Now, as you can see though, they run this puppy higher, nice big strong spike higher. And again, I've got a channel written on here, right? I've got a channel here, but honestly, I wouldn't hold your breath, right? I wouldn't hold your breath on that, right, on that channel. I think what's more likely is that we end up using this trend line here tomorrow. But again, we are really at the mercy of what we get here in the next few moments. So with this big, strong spike up, do we go sideways here? Right? If we do have this up and we start seeing double tops and double bottoms, it's a 1, it's a 2, right? And a buy back up. That failure pattern, right? That 2 try failure. Again, find that range expansion level down here. Mark that up as a level of support. Let those bears try to sell the breakout. Let the pullback sellers try again. We call this a 2 try failure pattern. And once I get that failure, I can then look to buy into their stops on the way back up into that trading range. A spike in channel may definitely be in store here because we have more room to breathe up here, right? 78, 79.5. So if we do get a pullback, right, pull back higher high on this, then you'll know, mark up those highs, mark up that low, and just like the flag pattern has 3 pullbacks, usually the spike in channel pattern will have 3 tests of that low, right? Buying the low, and then getting that deep pullback, right? The deep pullback is the first pullback, right, to the base of that channel, and we're looking to buy that deep pullback. That is usually where you're going to get the easiest, right, most reliable trade there. So if we do see it pull back and make that new higher high, mark up that high, bring it down to that low, right? If you get to it early enough, you can buy the low of the channel, buy the low of that channel. But remember, right, the big money we get in spike and channel patterns are almost always going to be on that deep pullback. And remember, that deep pullback, the secret to trading it is to let the sellers, because what's going to happen is this market will look very bearish when it pulls back. It'll feel like this market is bearish now, but until we see a full-blown 1, 2, 3 reversal, we're still going to look for those sellers to try to sell off of that moving average so I can now buy into their failure, right? That is one of the most common type of patterns on a spike in channel. Spikes up, channels out, right? It's such a strong bull move that eventually now nobody wants to buy way up here and the market pulls back, right? When it pulls back into its little buy zone down here, what's actually happening is the buyers are they're desperate for a lower price. Well, what really happens here, obviously, is the moving average, of course, is coming over. That kicks back. The sellers now say, oh, see, we went too far. Now it's time to sell this thing. And again, we know better than trying to sell that because we know the odds are not very good, right? The odds are not very good. That's going to hold. And because the odds are better that we go back up to retest the high, what I'll do is I'll let those bears try taking this thing lower. I'll wait for them to try selling off the moving average. Then we know where their stops are. We can buy into those stops. And then don't forget, moving average comes over, we can look for that pullback pattern right from there as well. So it's a failure pattern, right, into a pullback pattern. And again, I cover all of these patterns inside that free trading class, right? So make sure you grab that free class in the upper right-hand corner. And again, right, if they hold that pullback, right, if they hold it and they run it, well, fine, right? We'll grab that as a bear market now. We'll mark up that low, draw that low in off that high, right? And then we're selling off the high, right, of that channel. So it's not that I'm opposed to being a seller. I just need to wait for the right time, right, when it happens, right? That's all. If we do have a flag pattern here, right, watch that bear channel coming down. Remember, if it's a flag pattern, you'll know it because it'll be really slow, right? Flag patterns are always really, really slow. 1, 2, 3. The magic number of 3 on a flag pattern is always very, very common. And so, of course, once we do see that, and again, flag patterns feel like they're never going to stop because they're always so slow. And usually that means buyers will say, well, I guess we're done, right? That's what happens, right? A lot of times the buyers will see this, just the overall sluggishness of that pullback, 1, 2, 3, right? Kind of the magic number of 3 or that rule of 3 on that flag. And then once we get the 1, 2, and 3, it's almost like the buyers have lost faith at that point because it's so slow. We're lower lows, lower highs, and a lot of people call lower lows, lower highs bear markets, right? But it's not a bear market. It hasn't given us a real strong pullback yet, right? It's just kind of creeping lower here to what? To attract buyers into the market. What I'm going to do is I'm going to wait for those sellers now. What will happen is the sellers will try to sell here and they'll try to take this thing lower. In fact, that's what a failed flag looks like. So if you're wondering what a failed flag looks like, it usually has a 1, 2, 3 legs, right? Again, that kind of rule of 3s when it comes to flag patterns and spike and channel patterns, right? That rule of 3 now, again, by that point now, the buyers assume, I guess we've gone bearish. We haven't seen a big move. It is still a bull market. It's just pulling back. And what happens is as the market tries to go higher, if it is a full reversal, it'll rocket off of that high. But what I do is I wait to actually see those sellers try to sell that. And you know me, I love to use failures, and I buy right into those failures. So that's the way I like to trade the flag pattern. Again, use the rule of 3, that slow, sluggish move as it pulls back, right? Wait for that move up, pull back and go. Nice strong signal candle coming off of it. And if it does go up, right, if it does go up and collapses back down, well, guess what? Now you know it's a bear market. Simple as that. We'll go out, we'll find that new low, that off the high, right? And we'll use that now as major resistance, right, to sell off the high of that channel. Target, of course, that point back down to retest that low. So will we get a range up here, right? If we get a range, we know, right, it's a 1, 2 failure. Will we get that spike in channel? Remember, spike in channel patterns love to use that 1, 2, 3, and then deep pull back, failure into a retest of that high. Or maybe it's a flag pattern, right? That rule of 3s, 1, 2, 3, up and over. Or maybe it's up and fails, mark up that low, mark up that high, right? And we're selling, right, up off of that high. So pretty easy scenario there, right? Even if we go higher, lower, sideways, we're all covered there on the Nasdaq. Wrapping up the E-minis now, let's talk about the gold, because gold is nice and range bound right now. Range bound markets are easy markets to trade as long as you have the correct strategy. You got some higher lows, you got some lower highs, and that of course creates a triangle. Now, triangles they're range bound markets, right? They are very similar, right, in the way you trade them to rectangle ranges, right? So there's a rectangle range right there. So rectangle ranges, triangle ranges, I think this fits great as a triangle. And whenever you see a triangle, the big difference between a rectangle range and a triangle range, there's two big differences. One is going to be the pivots, right? All of the big hard edges, right, of that triangle right here too, right? The pivots, right? So basically where the market turns and creates the edges of the triangle, those are going to be where you want to be looking for those patterns, right? It's a range bound market, so you want to stay out of the middle, sell the high, and buy the low. Just like we talked about on oil, right? Oil being a range-bound market, buy low, sell high. Now, the gold is very much balanced. I don't think we have a real solid directional clue right now, right? In fact, I would call this kind of a neutral momentum. Now, why do you think this market is kind of coiled up in the fetal position right now? Probably because of FOMC. So you got to remember, right? Got to remember tomorrow, FOMC tomorrow afternoon. Stay away from the middle here on gold. Buy low, sell high, right? Focus your energy on these swings, right? Selling high. Focus your energy on these swings, right? Buying low, probably not that big one down there, right? But again, buy low, sell high, stay away from that middle. And what's the rule? Get to it early tomorrow, because as the day gets older, right, we are not going to have as much reliability, especially a market like gold. If there's one market tomorrow that you really got to be careful, you're looking at it right now, it's that yellow metal. So now that you know the key components here, right? The key is find those swings, right? Find those swings and look for your setups around those swings. Because we don't have any real bias, I can let the market go lower, right? Get in that area around the swing. If I can get it going lower, wait for that moving average coming over, right? Moving average comes over. Sellers, of course, what do? They try to sell off the pullback, thinking it's a a bear market. Good example of what it might look like back there. Strong move down, bears try to sell off the pullback, right? And the market runs back higher, right? That's something similar to what we're looking for tomorrow, right? Once we see these bears try to break out, sellers are in, pullback, sellers are in. Now we know where the stops are, and we can buy right into those stops. Same basic idea goes at the top, right? I want to use those swings, right? Use the edges of the triangle. And of course, I want to go let those buyers break out, get those buyers to try to buy the pullback. Once we get the breakout buyers in, the pullback buyers in, then I look for that move going back into that range, selling into those stops. Remember, you don't want to fade the first breakout, right? The first time the market breaks out, those are only a small slice of the market. Those are the breakout traders. But there are a lot of traders out there that'll wait for the pullback, and they'll try to buy the pullback. And sometimes that'll be successful, right? Not very often, but sometimes it will be. And so that's why you don't want to try selling the first one, right? You want to wait for that second one, because when you get that second one, now you know everybody's in. Then you can see, okay, now I know where your stops are, and now I can sell right back down into that trading range again. So buying low, selling high, using those failure patterns, right? And again, I talk a lot about those failure patterns in that free course, either linked up below the video or in the upper right-hand corner. Now, there's one more thing that's very different about a triangle, and that is it has an end to it, right? It's not like your average rectangle range where the rectangle can just keep on going. Now, we may keep on going sideways here inside of that rectangle I have drawn right now, but typically though, when you see trend lines come together like this, right? This kind of reminds me of the old Batman. Remember that Batman show? I'm definitely dating myself right now. But remember that, right? The old Batman show, right? Kapow, right? Bing, bang, right? You know, you get those, right? Those big expressions across the screen. I know I'm not that old, right? I'm not that old. I'm sure a lot of you guys recall, right? The old Batman, right? Oh gosh, I can't recall. Christopher Reeves, right? Was the right, played Batman, right? Oh my goodness. Was that Saturday morning television? My goodness, what a long time ago that was. But the bottom line though is, right, got a little sidetracked there. Bing, kapow, right? Bottom line is though, is that we're going to get some of that kapow, right? Off of the kind of the middle, right? Kind of the middle of that, right? Of that trading range. So what happens is once this triangle comes together, right, and kablamo, right, we get that big move out. What we're looking for now is one of two scenarios. Either it breaks and holds, or it breaks and fails. Now, what you want to think about is because this move oftentimes gets so dramatic, you don't want to just sell into it. If we do get, let's say, for example, a break higher here, because it's oftentimes so dramatic and that momentum is so strong, instead of just looking for the buyers to try once and selling into it, I'll use that nested pattern, right? We wait for them to try once, twice, and then I'll sell back down, right? Let the buyers try once, let them try twice, and then we can, right, and then we can sell it back down in. So if we do see it, right, again, jump down here now, and you want to buy it back up, we can't just buy it because the bears are too strong. Let the bears try once, let them try twice, much like on oil, right? Just like buying off the low on oil, you want to let those bears try twice before we get that run, right, back up into that range. And then don't forget, right, if it does go, right, if it does go kablamo, right, holds the pullback and goes, well, perfect. Now we know, find that new channel, find the hidden channel, mark up that high, right? And there's our sweet spot right there. Where's our target? Our target's going to be that big measured move up there, right? Up towards the top of that. What is that? 94, right? 0.8. So same thing, right? If we end up inside the triangle and all of a sudden we get that kablam, right? 1, 2, 3, hold the pullback. Now, of course, right, we mark up that channel and we're selling off that channel high. So again, we got to get to it early tomorrow morning. If there's one market that you really got to be careful tomorrow, it's definitely gold. So before the news comes out tomorrow, focus on buying low, selling high, avoiding the middle. After that news comes out, be very, very careful tomorrow. Promise me you won't go gambling away your hard-earned money, because remember, the good stuff comes on Reaction Thursday, right? Reaction Thursday is the Thursday following, right, tomorrow's big FOMC announcement. All right, wrapping up here tonight on that mighty euro. Euro is bullish into a trading range. Anytime we see a double top in a bull market, we always know we're probably going to be in a range. So anytime I have a range on the chart, I take that trading range, I copy and paste it down, I copy and paste it down, right? That creates my key levels of support, and I want to buy, right, off that level of support. It's a bull trend into a range. In a range-bound market, I want to buy low, I want to sell high, avoid the middle, right? So what I look for now is look for the pullback, right, and buy off of that low. You'll also notice I've got that prior swing right there. We call these reversal lines here, right? That reversal line obviously, right, can be used now. It got used a little bit right there, but usually it'll go up and then give us a nice deep pullback, and we can use that reversal line. So don't think for a moment that just because that little tiny little pullback right there was all we get off that, usually that is just a head fake. Usually it will end up coming back right after a nice push away from it, just because it's a great level right of support. So I'm also looking at some targets overhead. If we do get that pullback, my measured move here, right? If we do get the pullback here, looking for that measured move for my target overhead. If we don't get that pullback and we keep going higher here, well, then obviously now I can bring that measured move up. That will not be to be determined at that point, right? That will be a full-blown measured move. So we definitely know where the next leg up is trying to go, right around that 13,000 big round number. But for right now, though, we got bigger fish to fry right now. Again, tomorrow's FOMC day, so don't forget, right? Early in, early out. Gold's going to be nasty tomorrow because of FOMC. Euro will probably be a very close second place contender for the sloppiest chart tomorrow as well with the FOMC. So be aware of that, right? Be realistic with your expectations. And so I want to buy that deep pullback. What's the best way for us to buy this pullback right now? Well, there's one thing I notice. If we do go lower right now, there will be a trend line that will come down overhead. So if we do end up running lower now, right? If we do end up running lower now, what I'm going to do is I'm going to draw that trend line across, right? And now imagine now using that 1, 2, but having to get above the trend line now and using that trend line as that key level of support, right? So imagine now we draw that trend line down over the highs, and you'll notice how I draw that trend line. When you're drawing falling resistance levels like this, shave off those wicks, use the bodies of those green candles, right? Kind of like this one back here, right? You draw it like that, right? Over those highs like that. Okay, so that's my resistance line. So if we pull back off this high, we get into this area of support, I still have that resistance level I need. So what I like to do is I like to let those failures happen, right? But I want to make sure, though, that I get back above that line, right, and use it now as that key level of support. Now, these can be a little bit tricky here because a lot of times what will happen is the market will get back above it and then kind of grind its way down. Be very careful on the grinders. Grinders will usually be difficult to anticipate which one of them will be the one that finally goes higher. What I really want to see is I want to see if we do get this market going lower here, I want to see it go up, almost like kick back, and then we can buy off of that, right off of that trend line. And a lot of this has to do with kind of what happens down here, right? So, you know, for example, if we just keep going sideways, then obviously that trend line won't matter very much, right? But if that trend line does stay in play here, right, we go down, just be aware, right? You got to get back above that trend line, right, to use it as resistance instead of, or use it as support instead of resistance. I want to get that strong move down, let the breakout sellers try, let the pullback sellers try, and then get above, over, right, and grab that trend line as we go. Now, that may not be the problem, right? We may end up chopping through this trend line, so that trend line may not be there much longer. If we do continue here to go sideways here, then it turns into a very simple strategy now. Let this market pull back, get the moving average to come over, get those sellers to try to sell off that moving average. Again, let the breakout sellers have their party for a moment, right? Let the pullback sellers get a whiff of it as well. And then, of course, right, we can buy right into those failures. And if we get lucky on this, if we really get a nice deep pullback on this, if it really gives a nice deep pullback now we might have the ability here to get that great combination, right? That failure into that pullback combination, which we haven't seen a lot of opportunities to get that thing setting up for tomorrow. But this is one of the most common, again, it's kind of it's a failure pattern into that pullback pattern combination, kind of back-to-back, right, patterns there. So we're watching for that pullback off the high of this, right, of this range. We're staying out of the middle of the range. Now, what if the market jumps higher here? We know where the next objective is, right? We know where where the measured move is. If this market just pulls back, right, and keeps going higher, what are two patterns that I'm watching for? Actually, there's three patterns I'll look for. One is going to be what we call the two-try breakout, which is a strong move up, followed by the bears trying once, bears trying twice, and then buying into their failure. So imagine now we jump up, right? Real sharp move up. Watch the bears. Watch them try once, watch them try twice, right? And then grab it from there. It's very similar to what we saw here, right? Market jumps up, bears try once, bears try twice, buying up from there, right? So if we do see it, jump up higher, one try, two try, buying into the second attempt for those sellers, right? Because you got the profit takers, then you've got the sellers to worry about, and we're buying into that, right? Into those stops as we go. Another pattern would be a 1, 2, 3 breakout, right? Mark up that high, mark up that low, and of course we're buying off of that low. Another one obviously here too, if we do see it run higher, this could turn into a spike in channel. So if it does run higher here, we're watching the buy right off the low of that channel. So there are three relatively simple setups, right, if we see this market go higher, right? So if it goes higher and then pulls back right away, just mark up those highs down to that low, right? Find the hidden channel there. You've got your support level now, right? Now we're looking for that buy off of, right, off of that low. Or does it give us a 1, 2, 3 reversal, right? High, right? So high or low, right? And then of course we're buying that pullback from there, or one strong move up followed by two tries for those sellers. And again, you're buying aggressively with this, but you're buying into the stop losses, right, of those sellers. Last but not least here, how do we turn bearish, right? How do we turn bearish? Very carefully, right? Remember, tomorrow's FOMC. So don't just try to sell a move lower here, because that move lower will likely fail and back up. I want to see a 1, 2, 3, right? Got to hold that pullback after a strong move lower, mark up that low, mark up that low, mark up that high, right? And of course, there is our sweet spot, and we'll sell into, right, the top of that channel. Target, of course, at that point is all the way back down to retest that low from late last week. All right, guys, we are looking good. So a bull market into a range on the euro, buy those lows. I wouldn't try so much to sell the high right now, right? Buy those lows on the euro. Gold, again, is range bound. Fade those breakouts, right, on the gold. Nasdaq and the S&P have those big, strong spikes. We're waiting for one of those three scenarios. And, of course, over on oil, right, that big blast down, looking for the 1, the 2, and the back up into that range, or we're looking for that follow through with that 1, 2, 3 breakout. Boy, oh boy, got a great newsletter in the books here tonight. Coming right back at you tomorrow, though. Tomorrow morning, be back in our trade room, 8 o'clock Eastern time, like we always are, working hard with all of our clients. I'd love to see you. They're right there with me tomorrow morning, bright and early. Come out and join me as a brand new member. Our advanced membership package is right below this video tonight. You can learn a lot more about all of our 3 levels of membership, but only our advanced clients are with me every morning in our trade room. If you're not ready for membership, grab that free trial right to the left here of my ugly mug. As part of that free trial, you'll have our access to our free trading course, right? A free pass. Come out and join me as a guest in our trade room, and you'll see hundreds of examples of patterns we find every day, right, in our favorite 5 markets. As always, guys, my name is Joseph. Be well out there. Be careful tomorrow, and be here next time. Adios, amigos. Bye-bye for now.